Hey YouTube, what is up? Welcome back to the channel. Thanks for joining me here for another Reddit recap. Today we're going to be diving into the world of R investing. Let's check it out and see what's going on with Reddit this week. All right, hopping right in. Okay, is it true most wealthy folks don't have tons of money on hand? I've always heard that most truly wealthy people don't have tons of cash on hand because their money is making money. I have a business friend who even had to take out a large loan to pay rent, groceries, etc. due to no cash on hand, but I know he is a multi-millionaire. Thoughts? Now, no offense to your friend, but that just sounds dumb to me. Yes, it's good to have most of your money tied up in investments and other things that make you more money. But one, you should always have an emergency fund of at least 3 to 6 months of expenses saved up. So I have that tucked away in another bank account that's not easy to access. And then on top of that, in my regular checking account, I still keep a little bit of a buffer just so that I don't run low throughout my day-to-day expenses. So no, it's not good to have so little cash that you have to take out a loan to pay for your everyday necessities like your rent or your mortgage or gas or whatever it may be. All right, moving down the list. You can always refinance, right? If you buy a property at these high mortgage rates we're currently experiencing, I can always refinance my loan when the rates eventually come down, right? I mean, sure, the rates are high right now, but that's realistically not the rate that I will be paying for the next 15 to 30 years. Eventually, inflation will abate and the federal funds rate will start coming back down, at which point mortgage rates will drop. And when that happens, I can refinance. Is my understanding correct, or is it not that simple? Well, your understanding may be correct, but you are right, it's not that simple. One, being able to refinance depends on multiple factors. It depends on how good your credit is. If you're planning to refinance in the future, make sure you take good care of your credit score and keep it high so that you can qualify for a refinance in the future. Two, it also depends on how much equity you have in your home. I know most banks require you to have at least 20% equity in your home before they'll let you refinance your mortgage. Those are just a couple requirements that you need to make sure you have before you can refinance. But outside of your control, we also don't know what's going to be happening to mortgage interest rates over the next few years. If you do a quick Google search, let's look at what historic mortgage rates have looked like over the last few years. All right, so according to themortgagereports.com, I just pulled up this graph that shows the historical 30-year mortgage rates. We can see that yes, while today's interest rates are high compared to the last few years, according to this graph, it looks like they're at about 7%. We can see that they're still quite low compared to the history of mortgage rates, with past history showing that they've gone above 18%. So yeah, interest rates might seem high now, but historically, they're actually not that high, and we can't really guarantee that interest rates will drop in the future. So, while I do think they'll drop somewhat as the coming years go by, you can't guarantee on this, and I wouldn't buy a house now assuming that you're going to be able to refinance for a lower rate in the future. It's never good to make any financial decision, whether it's buying a house, making a certain investment, if it doesn't make sense for your financial picture right now at the rate you can get right now. So if you're going to buy a house, make sure you can afford it with the current interest rate that you're getting. Okay, I'm curious to read this thread. What is the best investment you made in 2022? I'm looking to begin my investing career and I want to get in on some good investments, whether it's flipping houses or stocks or whatever. What is the best way to start investing? What have been some major wins in 2022? I'm kind of nervous with the economy like this, but buy low and sell high, right? All right, cash pulled out around the time the war started. Yeah, to me, that seems like timing the market. I get that there's been a lot of volatility since then, and I know a lot of people are anticipating a recession, but I wouldn't sell any investments. I would definitely keep your investments in, keep investing, dollar cost average over time to eventually lower your average position and keep going that route. I wouldn't put all your money in cash and try to time the market and get in when the market's lower. Looks like we have a few single stocks here. I saw Chevron right here. This individual purchased Chevron, Twitter, inverse S&P 500. Yeah, that was probably a good call, but again, that seems like timing the market, so I wouldn't advise that. Yeah, so I'm seeing a lot of single stocks on here. My advice to anyone just beginning their investing career like this Reddit user is, I would just advise starting on a small and reoccurring basis just to build your investing muscles and, learn how to do it on a small scale. I wouldn't be asking strangers on the internet for advice on Reddit. I would just pick a low cost S&P 500 index fund, put a small amount in every month, and dollar cost average over time. All right, let's move on. Looking at a food truck investment. Hi y'all, as the title says, I'm looking at a food truck investment. A person I know has been doing the work to start a food truck. He's looking at an 80K rig and putting 25 cash down and getting a loan from the bank for the rest. I mentioned to him I would do a small investment in that. Looking at putting in 5K to fund the first bit of running the truck. How can we value this and what's the best way to set up? He will be doing all the work and I'll be silent unless when asked to help out. What's the good way to break out ownership? Thanks everyone. And then in edit, it looks like some people gave him some advice not to, but he said, just going to put my money in treasury bills for now. Yeah, this definitely isn't the type of investment that I would want to do. It totally just depends on your friend. Do they have a good work ethic? Do you have a history of working with them in the past? If they aren't trustworthy or if they don't seem like they have a good work ethic, I wouldn't even consider doing this deal. And even if they do, it doesn't necessarily make financial sense for you. At the end of the day, the food industry is very volatile. Most restaurants and food businesses fail. So just be careful when you're getting into something like this. I definitely wouldn't advise it myself, but that doesn't mean that you're not making a good decision. I'm still 3 to 5 years away from buying a house, trying to figure out where to invest my down payment money. I moved from a low cost of living area to a high cost of living area during the pandemic. I sold my house and am now renting. I have around $200,000 I made in profit from the sale of that house and I want to use it as a down payment in the future. Even with a large down payment, I still don't have enough to buy what I want in a high cost of living area. So I want to invest it somewhere so it's not losing money due to inflation. Then in a few years, I can hopefully buy something. It's currently sitting in my Ally high yield savings account and earning 2.5%, soon to be 2.75%, but is there something better out there? I did push 10K into I-bonds, but still need to figure out what to do with the rest. I do have a 401k and a private Vanguard investment account and have a large chunk invested in VT Sacks and similar index funds, but they are too volatile for me to put my down payment money there. I tried to look into bonds and was just overwhelmed with information. Is there a VT Sacks for bonds? Looking for any and all suggestions. Thank you. I'm definitely not an expert in bonds, but there's definitely something out there that you could use to index a bond portfolio. If you're getting almost 3% in your Ally high yield savings account, you're not going to do much better than that through another investment unless you go for the stock market or the S&P 500. And it all just comes down to your risk tolerance. I would say that if you're 5 years away from buying a house, it may be worth putting that in the S&P 500 and seeing how it grows. But again, that totally depends on what your risk tolerance is and how upset you're going to be if we have a downturn over the next 5 years. For me personally, I would feel comfortable investing that money in the stock market if I was going to be waiting 5 years to actually use that money. But yeah, anything less than that, I would keep that in a high yield savings account. Over 3 years at a low interest rate, you're not really allowing compound interest to do much for you anyway. So I think that the high yield savings account is the best low maintenance way to grow that money over the short term. All right, I've got a bit saved up from working. What should I do to grow my wealth? I'm newly 18 and have been working casual for a while with 18K saved up. Got a car and all that, and I'm still living at home, so expenses are relatively minimal. I'd like to get into investing, but I haven't the slightest idea how. I'm in Australia if that helps. Yep, I think the best way to get started investing for anyone, like I mentioned earlier, is to get started early and get started on a reoccurring basis. Definitely don't throw your entire $18,000 you've saved up right into the stock market. You should definitely set aside some of that for an emergency fund. Make sure you have enough to cover your day-to-day living expenses, and then anything on top of that, you could begin to invest. But you're definitely gonna want a dollar cost average that, which means slowly invest that amount over time and invest your income as you earn it. Don't dump it all in at once. Invest month to month, and then you'll be entering the stock market at different points throughout its volatility. I think people just get so worked up, they get so nervous about getting started, they want to put all their money in and they get nervous, which I would too. If I was putting all my hard-earned cash into the stock market at the same time, I would be very worried about what's going to happen to it tomorrow. That's why if you put in a little bit every month, it'll definitely work out better for you in the long run. Credit default swaps on chain. I'm challenging myself a little bit on this. The world of credit default swaps definitely gets complicated. I don't know if any of you have read The Big Short or watched the movie, but that's the world that we're jumping into right now. All right, credit default swaps on chain. Sup the best investors on Reddit. I've started a few months ago integrating credit default swaps into my plays, and I was thinking about how could this be taken one step further to get the big duck. Doing a Bill Ackman kind of play. Now, of course, for something like that, you'd also need to have the power to manipulate the markets just like our hedge fund friends, which we don't. But maybe there are other plays out there that you use to get those awesome daily losses. The highest alpha strategy I could find so far has been getting credit default swaps on risky, under-collateralized on-chain loans. This translated into receiving that high risky APY while also being covered from a potential default event for a small percentage of the APY. What are your favorite credit default swap plays? You know nothing about credit default swaps. To be fair, I don't either. I'm just, I'm going out on a limb on this one. But essentially, in my very limited understanding, credit default swaps are essentially a way to bet against a certain type of bond or bet against a certain type of loan that's being made to consumers. As part of the 2008 financial crisis, risky loans were essentially packaged and put into mortgage bonds, and investors used credit default swaps to bet against those mortgage bonds, and then they made a big profit when those mortgage bonds eventually failed. So to dive into this post a little bit more, what is an on-chain loan? Oh, on-chain lending. On-chain lending, also known as decentralized or crypto lending, is a form of lending that takes place on the blockchain. So this person is looking to potentially buy credit default swaps for risky loans that take place on blockchain, hoping that in the event that those loans ultimately fail, they would profit off of those credit default swaps. I don't even know what avenue they would go to purchase those credit default swaps. Ultimately, I agree. Sounds like they don't really know what they're talking about. Probably doesn't sound like I know what I'm talking about because I don't. So obviously I can't recommend it. All right, everyone. And with that, thank you for tuning in to another Reddit recap. I hope you enjoyed going through our investing with me and diving through all the posts to see what the people on Reddit are investing in. I plan to do more of these videos. We'll continue to jump into other subreddits. Comment down below if there's a subreddit that you want me to check out, that you're interested in. And as always, please subscribe to the channel. It would mean a lot to me. Like the video, and again, leave a comment down below on if you have any recommendations for subreddits or any other recommendations for the channel. Thanks for watching, and we'll see all you guys next time.